So in this session, I'm going to talk through the very high level considerations that you need to have when setting up a business in the UK and the things that you need to consider. The first consideration to have is the corporate structure. There are three main types of corporate structure you can have in the UK when setting up your business. The first is a permanent establishment or a branch of your overseas business. Secondly, it's a limited liability partnership, which has the characteristics of both a limited company and a partnership in terms of how it's taxed, or a limited company. When it comes to a permanent establishment or a branch, this isn't a separate legal entity. It's effectively an extension of your overseas business. So there's no limited liability or ring fencing of your UK operations. And also, if you have a permanent establishment or a branch in the UK, then any profits made in the UK will be taxed under UK corporation tax rules. Also, if you have a branch, then you must file your parent company accounts on public record in the UK. For a limited liability partnership, effectively there are members or partners within that entity, and profits are allocated to those members under a LLP deed, and the tax residency of the member will determine how those profits are taxed on that individual member or partner. There are pros and cons of each of these different types of entity in terms of how you set up in the UK, and there's different commercial and tax benefits to using each of them, which will be dependent upon your global structure and what you're looking to do in the UK. For more information on the tax implications, then please take a look at the other videos on our website. However, in general, the vast majority of entities that are set up in the UK are limited liability companies. A limited liability company is a separate legal entity registered in the UK. It provides limited liability to your UK operations and a ring fencing of those. It gives the perception of a local business with longevity. In terms of tax, corporation tax is paid on any profits made in that UK company. And also the UK has public filing, so those UK company accounts will need to be filed on public record with Companies House each year. Given that the vast majority of entities that are set up in the UK are limited companies, for the rest of this summary, I'll assume that that is the case, and everything I say around an entity will be based upon a limited liability company. So Companies House is the UK government registrar of companies here, and it's responsible for incorporating any new companies. In order to incorporate a new company, you must have the following information. So you must have at least one director. That individual does not need to be based in the UK. It can be an overseas individual. It needs to have one shareholder. Again, if it's an individual, they don't need to be based in the UK. And they can also be an overseas corporate entity as well. It can be the shareholder in a UK company. The company needs to have a registered office address, which does need to be in the UK. But most commonly, you can get your accountant or lawyer to provide that address for you. And the company needs to have a unique company name that isn't too similar to any other entity registered in the UK. And there's actually a name availability checkout on the Companies House website, which you can use to see if a particular name you want is available to use. Companies House has also introduced new identity verification processes for company directors and persons of significant control. What this means is that directors and any individuals who are deemed to have ultimate control or influence over a business will need to have their identities verified with Companies House. Generally, this is done by scanning in your biometric passport and providing other personal information. Once this is done, then each individual will get a unique identification code, which they can use across any of their other UK registered businesses. So this is a one-off verification that needs to happen. These verifications must be done before any new UK company is incorporated, as those identification codes will be required when setting the company up. The UK is a system of public filing in the UK, so any UK company directors will be publicly named, as well as shareholders on the Companies House website. Also, companies' accounts and financial statements, no matter what their size and what the size of the company is or what its ownership is, do need to be filed on public record within 9 months of the year end. You also need to consider, when you have a UK company, whether that UK company actually needs a statutory audit. When it comes to UK companies and the size of them, actually when it comes to audits, it's the size of the global group that matters rather than just the size of the UK company. So it's the size of the global group that UK company is part of. So if the global group meets at least 2 of the following 3 thresholds, then any UK company within that group will require a statutory audit. So those thresholds are revenue of more than £15 million per annum, gross assets of more than £7.5 million per annum, and employees of more than 50. So if the global group meets 2 of those 3 thresholds, then any UK company in that group will need an audit, which can mean that actually relatively small UK companies require an audit just because of the size of the global group that they are in. For more information on UK audits, take a look at the other videos on our website. So once you have a UK company set up, you also need to consider getting a UK bank account. So in the short term, it may be possible to operate without a bank account in terms of having your overseas parent company pay for the costs and overheads of the UK company directly. But as the company grows and as the activity grows, it will become more and more apparent that a UK company will be required. Many suppliers in the UK actually require payments to be made under the direct debit automatic payment system. If that's the case for your suppliers in the UK, then you will need a UK bank account to be able to do that. Getting a UK bank account can take some time, and traditional UK high street banks generally like a UK company to have some level of UK connection, whether that be UK-based directors or shareholders or a physical presence here in the UK. Some digital and challenger banks can offer some alternatives, however they don't always offer the full suite of services that UK traditional mainstream banks do. In general, you'll need to provide any bank with details of the directors and shareholders and the various ID documents around them, business plans, and also an idea of what the UK operations will be in order for them to understand what that bank requirement will be. If within your international group you already have a relationship with another UK bank, we would urge you to use any relationships you currently have to try and open doors to UK banks in the UK, whether that be another entity having an affiliation with a UK bank, or one of your directors from overseas having a UK bank account in their own name already. Use whatever relationships you have to try and get some doors open, because getting a bank account can take some time. Do not leave this to the last minute. It can take weeks or even months to go through the ID verifications and the opening process and the KYC requirements to get a UK bank account open. So you have a company, you hopefully have a bank account. Other things to consider in terms of getting set up and operating in the UK. So next up is a VAT registration. If you're selling goods or services in the UK and you're making taxable supplies, then you may need to register with VAT. VAT is an incredibly complex area, especially when you're potentially selling goods internationally or into Europe. For more information on VAT, take a look at the other videos on our website. Also, potentially you're going to be employing people here. So if you're going to employ people in the UK, it's important that you speak to a UK HR advisor or employment lawyer as soon as possible. The UK has some very specific rules around employment and work-related practices and regulations that are in place in relation to minimum wage, holidays, and vacation levels. Also, if you have employees in the UK, then you may well need to set up a workplace pension plan under the UK company's name and potentially make pension contributions into that for your employees. Again, it's really important that you get advice early on to ensure that you are compliant and you're setting your business up successfully and actually can be operational as soon as possible. So that's a very high level overview of the considerations you need to have in the UK. Please get in touch if we can support you more.